Now today's video is probably going to be long overdue, but what we're going to be talking about is why some of the highest yielding ETFs across the market, like take TSLY for example, the Yield Max Tesla Option Income Strategy ETF, that's down now around 76.35%. I want to talk about why these ETFs, even if the underlying, which in this case is Tesla stock, even if Tesla stock recovers very quickly, I want to talk about and share with you guys why ETFs like these ones might never recover. And that's even if the underlying stock seems to have a massive recovery. Now this video is going to be super helpful, especially if you personally are interested in investing into some of these ultra high yielders, which I personally have no problem with, but I do want all investors out there to at least somewhat understand how they work, because I personally don't think that's too much to ask for. So again, if you have any of these ultra high yielding ETFs in your portfolio, call it MSTY, TSLY, whatever the case might be, you're definitely going to want to drop a link down below, stick around, subscribe, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now I don't have some sort of grudge against TSLY. I actually own some TSLY, and you guessed it, I'm down pretty significantly on my position. I'm not trying to pick on TSLY, but this is a good example for this video. So TSLY is the Yield Max Tesla Option Income Strategy ETF, and keep in mind guys, different ETFs across the market look very similar to this one, and I'm just going to be using this ETF as an example for this video. Now this ETF became very popular a while back, and this is because it seemed to have offered some of the biggest monthly income generation compared to almost any other stock and or ETF in the market. And honestly, early on I found out about it, and I personally was also very interested. Now it says right here the fund does not directly invest into Tesla. And it says the fund strategy will cap its potential gains if Tesla shares increase in value. The fund strategy is subject to all potential losses, etc, etc. Now, if you look at all of TSLY's distribution since inception, even with my personal position being down quite a bit, I think my average cost on TSLY is like $25 per share, and it's currently trading in the 9s. Because of all the income this ETF has paid me and other investors over time, this ETF actually hasn't been so horrible considering what it could have been. But that's besides the point. Understanding how this ETF works, it says right here the fund overview. The Yield Max TSLA Option Income Strategy ETF, or TSLY, is an actively managed fund that seeks to generate monthly income by selling and writing call options on Tesla stock. TSLY pursues a strategy that aims to harvest compelling yields while retaining cap participation in the price gains of Tesla. Now, without going super deep into cover call selling, and I can of course make a video sharing with you guys exactly how to sell cover calls and all that included, because I love selling cover calls. I do it in my portfolio as of right now and have for several years now. But it says right here, key takeaways: a cover call is a popular option strategy used to generate income in the form of option premiums. Investors only expect a minor increase or decrease in the underlying stock price for the life of the option when they execute a cover call. Now, to execute a cover call, you need to have a long position, and then you write call options and basically get paid premium in return for someone else to have access to your shares, more or less. Now it says right here, this strategy is ideal for investors who believe the underlying price will not move much over the near term. Which again brings me into the TSLY ETF specifically, or Tesla stock. Now because Tesla stock is highly volatile compared to other stocks in the market, that does mean that there is going to be a juicy amount of option premium, which is exactly how TSLY ETF has been able to pay out so much income over time. But this also means that if Tesla, the underlying stock, drops in price during a specific time frame, the Yield Max ETF that tracks it can also drop with it. Now here's the problem. Here's the reason why a lot of these ultra high yielders might never return to previous levels, or if they do, it's going to be a long, strenuous climb back up there. Right here in the fund overview, it says while retaining cap participation, which basically means that there is not going to be as much upside compared to if you're holding on to the underlying. And that's once again because this is a cover call style or option style income ETF. Now, if you go down to TSLY's holdings as of right now, there's a bunch of treasury bonds, it looks like, there's some cash. And then right down here, you can see that there's some cover calls on Tesla stock. Now, this once again means that even if Tesla stock, which is once again the single stock that TSLY tracks more or less, if Tesla stock, the underlying, has a massive rip, let's say it goes up 100 or 200% in a week or a month even, TSLY is not going to be able to see all those gains because the upside is capped by that cover call. Now, over time, tracking a volatile stock like Tesla, for example, or lots of other ones that we've seen throughout the markets, if you look at Tesla's chart over the last 5 years or so, this stock is very, very choppy, which once again makes the stock ideal to earn as much premium as possible just about because there's so much volatility. But also, if things are not timed perfectly, which again, it's almost impossible to do so, it's going to be very, very hard to harness income potential from an underlying stock like this one, but also not see massive decay, and that's during the downtrends. I mean, take this time frame, for example, there was a lot of chop, but also the chart basically moved from up to down. Now, during this time frame, if you sold covered calls on Tesla, you probably could have earned a massive amount of income generation, but again, it doesn't mean that the actual underlying wouldn't have dropped in price significantly. So for names like TSLY, which are down around 76%, and I'm just talking price return here, I'm not talking about total return. I get it, total return is not nearly this bad whatsoever. But names like these ones, even if the underlying, which in this case Tesla stock, recovers very quickly or even slowly, it's going to be very, very hard for this ETF to basically follow. Now, you've seen over the last year where TSLY was trading in the 11s, and then actually over time got up to $17, $18 per share. And again, not to say that during this time frame, this ETF wasn't generating a massive amount of income, because it definitely was. But again, when you're tracking a stock that's going to go up and down and you're selling cover calls in it, it's going to be very, very hard to see any sort of potential upside. Now, that's where the income investing strategy comes into play, I suppose. If you're earning enough distributions on an ongoing basis, I mean, heck, it probably won't even take all that long until your entire initial principal is paid off. And at that point, you're playing with the house's money. Now, even for my shares of TSLY that I bought a while back at around $25 per share, because TSLY has paid out around $10.31 per share in the last year, I mean, that means that I'm pretty much a year away at this current rate to have my entire TSLY investment paid off. And then I'm basically earning distributions, whether it's 1 cent or $1 per share per month, which is absolutely free. So even though these investments can still offer a positive total return over multiple different time frames, and this is simply because some of them at least do distribute so much income consistently, I still just want to make a video and talk about the fact that these ETFs, even if they have the chance to recover, saying that the underlying moves up very quickly, it's still going to be a long road until they get back to any previous highs that we've seen. So now that we talked about ultra high yield investing, I share with you guys why it's going to be a struggle for multiple of these ultra high yielders to make it back to previous levels, and this is because of the underlying strategy. I lastly, most importantly, have a question for you guys down below. When it comes to ultra high yielding ETFs, if any, which ones do you personally like? Drop some of their ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.